Hey, good morning, everybody. Welcome to another day of Mark Report brought to you by Mike Bjork. Today is June 1st, Monday. Wow, new month. Summer's upon us here. Hey, we got a bit of economic news releases, so we'll jump right into it so we're not taking up a lot of your time. We'll start off with the personal income for the month of April. So back in March, income stayed the same. There was no increase. Forecast was supposed to be at 0.3%. You can see that to 0.4%. So good news. Everybody's making more money. Well, on average anyways, right? Consumer spending for the month of April. It was up in March at 0.5%. It came down, it was supposed to forecast down at 0.2 and came in actually below expectations at 0.1%. So basically people are making more money but saving more money versus spending it. Core PCE, this is the Fed's favorite gauge for inflation. This is where we gauge our inflationary numbers and we strip out food and energy, which kind of creates volatility. So it gives us the core. So we had a 0.1% back in March. Forecast is supposed to go up to 0.2%, and it basically remained unchanged in April at 0.1%. These are month-over-month increases, not versus year-over-year. Year-over-year, we're actually still low. We're not near the 2% level that the Fed would like us to see attain. Market PMI for the month of May. So this is manufacturing numbers. We had anything above 50 is considered expansion. So we had a 54.1 in the month of April, and it dropped slightly to 54 in May. And then ISM. So we had two different manufacturing numbers. Market shows a slight decrease. ISM showing a slight increase. So again, anything above 50 is expansion. Anything below that becomes a contraction. So April 51.5 for the ISM. It was supposed to tick up to 51.8 and exceed that to 52.8. So a little mixed bag of manufacturing numbers we're seeing right there. Construction spending, month of April. We had a 0.5% back in March. Supposed to continue up to 0.7 and actually exceeded that 2.2. So the weather's obviously subsided, so construction spending is increasing. We're approaching the summer months here, so you'll start seeing that pick up a little bit as well. So obviously it's good to see personal income going up. Consumer spending, it's not always saving. A lot of people are actually paying off debt in that, so those numbers can be a little obscured in that regards. But otherwise, in manufacturing, obviously, is showing little numbers in between market PMI and ISM showing conflicting numbers right there. So today, the stock market was a little bit funny. It started off a little mixed. Then we saw all of it down slightly. Now we're seeing it up, all of it pretty much up slightly. So after all the data came up, so far it's starting to take its way upwards. Now this is on the verge of also hearing about more bad news out of China, where their PMI, which is basically their manufacturing, continues to decline. So obviously that's not helping on the global economy wise. And then also watch out this week. We got Greece hit with one of their other installments of the debt due on Friday, and we'll see if they are able to pay. As there's been voicing concerns about maybe repayment. This ongoing battle has been going on and on and on, and this week won't be any exception. So even if we have good news, if it looks like there's concern about Greece not paying and falling out of the Eurozone and stuff like that, that could have the opposite effect for this equity market. So just be careful. This go on this whole week as the payments due on Friday. Bond market, we were up, and then as the stock market started taking off a little bit so far this morning, it pulled money out of the bond market, and bond markets come down. So bond market right now is taking a turn for the worse, which means that money's coming out, rates are climbing up a little bit. So pricing has worsened from Friday. As you can see, that bit of a dip right here from where we were on Friday. We're down to about here now, and basically pricing's got worse for interest rates today. All right, folks. Hey, have a wonderful day. We'll cut it here, and we'll see you guys tomorrow. Thanks so much for watching, and have a wonderful day. Bye.